get expropriated by the government, right? But if it's a multinational and it has operations in 6 different countries and it has its Bitcoin custodied in Switzerland, right? Then you think, well, maybe even things go bad in Africa, and it's African. If it's a gold miner in Africa, but it has Bitcoin in Switzerland, right? And the Bitcoin is worth half of the company, then even if its operations in Africa get shut down, it's worth something, right? And so Bitcoin actually serves a useful role. It's a way to diversify your portfolio from that currency risk and from that operating risk. And you can do it if you're an investor, but you can also do it as a company. So a company itself can construct an equity which is diversified and hedged against the risks in its own marketplace. And it can build shareholder value in that way. And so this is a global asset and a global strategy. And everybody in the world has local banking risk and local currency risk and local government risk. But up until Bitcoin, they didn't have an option to actually hedge that risk. Today, you could actually hold the majority of your treasury assets outside of your local banking system, outside of your local currency, outside of your local country, and you could still operate. And I gotta believe that that's beneficial in a lot of ways. The obvious way is your company's more likely to last. The second way is, if you operate a business in, let's just say, a banana republic country randomly, and it doesn't have a rule of law, if the government wants to seize your mine or seize your bakery or seize your hotel, if all of your assets are in the local bank under the control of the government, you have no leverage, right? They just take all your money, lock up your bank, and take your factory, and you're bankrupt. But if you actually have most of your financial assets outside of that system, then they have a vested interest in negotiating with you, because they probably like to keep you a well-endowed corporation providing jobs and making investments in their country. So you see, a strong, diversified multinational is going to get treated better than a local, undiversified manufacturer. Right? This is the plight of Jews in the 30s in Germany, right? Where the Germans just seized all their money, took all their assets, took all their property because they didn't have a choice. But if you had a choice, if you had your money outside the country, then maybe you would say, maybe I'll give you half. Let me leave, or I give you a quarter. Whereas what really happened in the day was it rapidly became, I give you 90% and then 95%, and then it was, I will give you everything I have, and my cousin in America will give you a lot more to let me out. And so that's the plight of the expatriates, under duress in the conventional system. And I think that Bitcoin really is quite a powerful idea, because you can build a company where you're protected from being abused by the local government or the local marketplace by using Bitcoin as treasury asset. But you can also create a security and equity that has a lot more appeal to international investors, because you're holding an international asset. Right, so you're less risky to people that would invest in you, and you're respected more and treated better by those that would abuse you. And so there's really no downside. And of course, if you generated $10 billion of cash flow over 10 years and you gave it all away, when the crisis comes, you've got nothing. Whereas if you generated the $10 billion in cash flows and put in Bitcoin, when the crisis comes, you'll have $50 billion in assets. You'll have, right? When the crisis comes, it'll be a non-crisis, right? Because Because in the latter situation, your option is just shut down the factory, leave, and have the $50 billion and be rich. Whereas the other operating strategy is I gave away my riches to my investors, and if this factory gets shut down, I have nothing. So one drives, it's literally the road to serfdom, right? It drives you to desperation and eventually to death, corporate death. And the other is a path to life and vitality and prosperity.
So, Michael, what you talk about with regard to Bitcoin not being a currency derivative is the thesis that underpins layered money and the Bitcoin layer, which is that Bitcoin is its own layer of money. It does not derive from the balance sheet of any financial institution, and it doesn't have the risk of any counterparty. And it's the most important property about Bitcoin is its independence from the financial system. The last question I have for you is about a couple of the topics you've talked about, one being the spot ETF in the United States regulatory environment, and the other being this source of Bitcoin demand coming from around the world in countries without stable currency regimes, in countries that have seen frequent default of their sovereign debt. So maybe you can just answer for us, where is the Bitcoin adoption going to come from in the next 5 to 10 years? Is it both of these sources? Is it one before the other? And what is your vision for Bitcoin adoption?
Bitcoin adoption is going to come from all channels. There are going to be on-ramps via crypto exchanges everywhere in the world. There are going to be on-ramps via peer-to-peer trading. People are going to actually trade their goods and services for Bitcoin to get in the ecosystem. There are going to be on-ramps from operating companies that start to heavily invest in Bitcoin. There's going to be on-ramps from the spot ETF, and eventually there'll be on-ramps from conventional banks like Deutsche Bank and the like. They're all different ways that capital will flow into the Bitcoin network. What'll be the biggest? The thing that's going to drive price most, that'll be the first order driver of the value in the network will be the spot ETF first. If you have the ability to buy Bitcoin right now via a crypto exchange, you should count yourself lucky. You have, if you have the technical capability to buy it, and if you have the knowledge to be confident in buying it, then you're going to be the winner. Because you get to buy it at 26,000 a coin instead of $1 million a coin, right? And so when the institutions come, massive walls of capital come, and when they buy it, there's going to be a massive short squeeze. There's not enough to buy. The price is going to have to adjust up rapidly, and as the price adjusts up, then the ability for the humble pleb to stack sats and to benefit, it'll be there, but it won't. Instead, you'll be stacking sats at 250,000 a coin, not 25,000 a coin, right? And if you're making $10 an hour at McDonald's, right, that's the same as making $100 an hour then, right? So, you'll eventually look back and say, wow, I'm paying 40 times as much. So if you're making $10 at McDonald's, that's the same as getting paid $4,000 or $400 an hour, right, at that time. So right now is a very special period because we're at the tail end of the crypto period, or the crypto era, where everybody got Bitcoin primarily through crypto exchanges, and we're just at the cusp, at the beginning of the Wall Street era, where most people will get their Bitcoin exposure by buying an ETF from Fidelity or BlackRock, or buying some other security. And eventually, you'll see a banking era where people will just go to their bank, J.P. Morgan, and they'll buy the asset, and there'll be treasury services for people who want to hold Bitcoin in kind, And then there'll be others that'll hold the spot ETF because they think that's a bit easier. And then there'll always be the community of maximalists, that are self-custodying with their own seed phrase and hardware wallet and the like. And there will be, I think, an explosion in options and diverse ways to acquire Bitcoin and hold Bitcoin. I can see at some point when all the banks have adopted it, maybe you acquire with your bank. I can see another point when Apple and Google and Microsoft will adopt it, and maybe you'll buy it and hold it on your iPhone. I can see a world of a lot of special purpose, Bitcoin seed phrase devices and signing devices, and there'll be competition there, and some people will do it that way. I can see a world where there will be layers, right? If Bitcoin is a layer, then Bitcoin sitting in the Lightning Network is sort of a layer up if it's custodial. Bitcoin sitting in a spot D ETF is another layer. Bitcoin sitting on the balance sheet of MicroStrategy, where you own MicroStrategy stock, is another layer. Bitcoin sitting custodially in the iCloud may feel like another layer to people. And then Bitcoin insurance policies, or I can imagine Bitcoin funds and other ETFs that, imagine it's not an ETF which is pure Bitcoin. What if I actually take short duration sovereign debt and I mix it 50-50 with Bitcoin? So I end up with an instrument which is, on one side, it's generating 500 basis points of taxable income and low volatility versus the dollar. And on the other hand, it's generating 15% tax-deferred appreciation. And I create this instrument which doesn't have the appreciation of Bitcoin, but it doesn't have the volatility. So you could imagine all sorts of securities like that.